In the United States, where amid looming fears of an economic slowdown, US Treasury Secretary Janet Yellen is downplaying the possibility of a recession in the United States. Yellen says growing consumer spending, industrial output, credit quality and other economic indicators do not suggest that the economy is recessionary. But she added that America's inflation is way too high and straining the country's economic system. Yellen made the comments in a TV interview days before the US is due to release a trove of economic numbers that may fuel the notion that the country is, in fact, entering a recession. The data will detail factors including new home sales, consumer confidence, plus incomes, spending, inflation, and overall output data. Ahead of the Thursday release, some economists expect the US economy to demonstrate further contraction. And if the numbers indeed show a second consecutive quarter of negative growth, well, that is the informal definition of a recession. The US economy shrank by 1.6% in the first quarter of this year. Two straight negative readings are usually considered a hallmark of a country entering recession, although in this case, some economists and the Biden White House think the numbers may be misleading. Yellen highlighted America's unemployment figures in her comments. Unemployment stands at 3.6%. That's nearly a half-century low. She said the US remains a very strong labour market, but she acknowledged that the American economy is in a transitional period in which growth is slowing. She said the slowdown is necessary and appropriate if the economy is to grow at a steady and sustainable pace. Slower growth could help bring down inflation. America's June inflation numbers stood at 9.1% year on year. That's the highest in 4 decades. For more on all of this, we're being joined by economic advisor and strategy consultant Jaime Martinez, and he is in the Spanish capital of Madrid. Mr. Martinez, thanks very much indeed for joining us today. I mean, there's going to be a bit of an argument here in the United States this week, isn't there, if indeed a second consecutive quarter of negative growth is notched up, because under normal traditional circumstances, investors and economists would recognize that as the start of a recession.
Yes, good morning. Thank you very much for having me here. Exactly. Although we are facing a context with high uncertainty, economic data and expectations show that there is a very high likelihood of recession for the United States economy in the second quarter of this year. Let's remember that the US GDP had a downturn of 1.5% in the first quarter. Then, if there is another downturn in the second quarter, we can talk of a technical recession. Right? And this scenario is a consequence of the new monetary policy addressed by the Federal Reserve in order to face the high inflation, which now is 9% in the United States, the highest in 4 decades. And indeed, after more than 1 decade of expansive monetary policies, with the main instruments of zero or interest or negative interest rates and the famous quantitative easing programs, to maintain a credit panic to the system, the inflation has finally arisen with strength during the last year. That is why the Federal Reserve, after months of inaction, now is answering with a very restrictive monetary policy. From April till now, interest rates in the United States have increased from 0.5% to current 1.75%, and with expectations of further increases in the coming quarters.
So, Mr. Martinez, you seem to be embracing the argument that has been advanced today in the Wall Street Journal by Senator Elizabeth Warren of Massachusetts, who says the Fed's aggressive interest rate hikes risk triggering a recession. But there are voices here in the United States who say, well, hang on a second. I mean, it was Treasury Secretary Janet Yellen and President Biden who waved away concerns about an inflationary spiral when they were voiced by people like former Treasury Secretary Larry Summers. And there are many voices here who say, well, the Fed is now left dealing with a mess that essentially the Biden administration created by flushing so much public money into public spending projects through America's economic system.
Yes, I totally agree with that diagnosis. Actually, economists know that inflation is always a monetary phenomenon. And in this case, as usual, this high inflation has been caused by 1 decade of a very expansive monetary policy, which led to higher public spending by the governments, of course, in the United States, but also in Europe and in other countries of the world. And for me, this is the main origin of the high inflation. Always a very low interest rates policy and high public spending. And for that, I'm not surprised about Janet Yellen's comments. She's the former Federal Reserve president, and she knows very well this phenomenon of inflation. And she knows that the Federal Reserve must act now with strength. Maybe this recession will not bring a higher unemployment rate as other recessions have produced in their recent history, but maybe this is because of another effect that we should consider. We can mention the Great Resignation phenomena during the last year with the pandemic, and that is why I don't think that it is very responsible trying to hide or make up the recession, because of course recession is going to happen very probably in the United States in this year, and this is going to have a high impact worldwide, not only in Europe but also in India, because we must remember that the United States is one of the greatest consumers worldwide in the global demand.
So at the end of the day, are you saying it actually doesn't matter what this is labelled? I mean, the real issue is to treat the problems that are besetting the American economy rather than have the debate about whether it is or is not recessionary?
Yes, I think far from trying to accept which is the classy definition of recession, the great problem now here is inflation. Inflation is the worst problem now, and we have to face it. Not only in the United States, it's a global phenomenon now, which, by the way, is not caused by the war of Ukraine. Many economists have been arguing that, but of course we know in the United States, for example, inflation began to rise during the last year, in March of the year 2021. So that's why we cannot say this is a consequence of the war in Ukraine. It's, again, a consequence of these expansive monetary policies and the higher of the public spending by all governments in the world. So that's why I think the main challenge now is to act against inflation. The Federal Reserve has been late answering to this problem, as well here in Europe with the European Central Bank, which now finally last week the European Central Bank announced a rise in the interest rates. So that's why I think all the main central banks, although they have been acting very late, now they must respond with more strength. So that's what we can expect now, a recession during maybe in the last of this year or in the new year, but in the whole world.
Challenges the world over. Jamie Martinez, economic advisor and strategic consultant, joining us today from Madrid in Spain. Thank you very much indeed for your insights on that.